Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Tuesday, February 24th, and this is your New York Open Brief. A rebound in U.S. consumer confidence meets a cautious Federal Reserve, while oil holds firm on Middle East tensions and Europe's sanctions split. Starting in the U.S., consumer confidence surprised to the upside at 91.2, a bounce from January's low and above expectations, with a better read on both current conditions and the outlook. That helps sentiment, but policymakers aren't rushing to declare victory. Chicago Fed President Austin Goolsbee says rate cuts need clearer evidence that inflation is headed back to target. And strategists note the dollar could still be squeezed higher if geopolitics flare, even if a sustained rally case isn't there yet. Meanwhile, tariff policy remains a swing factor, with analysts calling the recent back and forth a headwind for clarity. Housing stays soft. Case-Shiller's 20-city index is up 1.4% year-on-year, near multi-year lows, and Home Depot's quarter paints a frozen turnover picture. Fewer trips, slightly bigger baskets, and guidance that looks flat to modest at best. Even with mortgage rates edging towards 6%. The stock bounced on the print, but management isn't signaling a quick thaw. On geopolitics and commodities, crude is hovering near a 7-month high on worries about a U.S.-Iran standoff as last-ditch talks approach. In Europe, the UK escalated sanctions to target Russia's oil transport network, while the European Union failed to agree a fresh package amid internal opposition. Safe haven interest is lending a bid to silver, and base metals are firmer as tariff fears percolate. In tech and investment, one wrinkle in recent U.S. growth math is artificial intelligence, where strong domestic capex has been offset by a surge in imported computers and chips. Corporate AI momentum continues, with new workplace tools rolling out and fresh data center plans aligned to renewable power. Yet some strategists are flagging the risk of a broader social pushback to rapid AI adoption. Turning to markets, the dollar tone is mixed but supported intraday by Fed caution and geopolitical risk. The New Zealand and Australian dollars are softer, the latter also weighed by tariff uncertainty ahead of Australian inflation data. The yen is weaker as reports of political reservations about further Bank of Japan hikes resurface, and the euro feels the drag of sanctions disunity. Oil stays supported, silver has an upward bias, and base metals remain underpinned. Looking ahead, watch Australian consumer price inflation and testimony from the Bank of England's Andrew Bailey. Geopolitical headlines around Iran, plus any U.S. tariff developments, are the near-term swing risks. Otherwise, the U.S. calendar looks light. For today's watch list, keep an eye on dollar-yen, where policy tension in Japan favors an uptrend, while risk sentiment could amplify moves. The Aussie against the U.S. dollar looks soft into the CPI print, with tariff noise a kicker, and the Kiwi against the dollar remains under pressure on firmer Fed rhetoric and trade concerns. Euro-dollar could lean heavier if Europe's sanctions split persists. In commodities, crude retains an uptrend on the Iran risk premium, while silver and the base metals complex have a constructive tone on safe haven and tariff dynamics. Bottom line, resilience is peeking through the data, but policy patience and geopolitics still set the tone. Markets are optimistic, but only cautiously so.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.